Welcome to this explainer. Look at the skyline of practically any major city today, and you are going to be instantly blinded by these massive gleaming new glass towers. I mean, it's a multi-billion-dollar visual spectacle, right? But beneath all that shiny surface, there's a seriously fascinating architectural and financial dynamic unfolding in the current property market. Today, we're diving deep into the architectural and financial realities of luxury real estate in 2026. Specifically, we're pitting the lasting value of pre-war limestone directly against modern glass luxury. If you've been watching where the really smart capital is moving lately, you already know this debate is entirely reshaping how we define long-term wealth.
And this brings up a huge question that we really need to tackle. Does new actually equate to lasting in luxury real estate? Psychologically, it's so easy for us to look at a brand new, cutting-edge skyscraper and just automatically assume it's the absolute pinnacle of long-term value. We're totally conditioned to think that the newest tech and the newest materials will always hold the greatest worth. But, as we'll see from the source material today, we have to dig a lot deeper than that shiny, day-one facade to figure out what actually survives the test of time.
To systematically break this assumption down, we are going to cover 5 key areas: the glass skyline illusion, the engineering of permanence, absolute scarcity, wealth preservation, and finally, character and legacy.
All right, kicking things off with Section 1, the glass skyline illusion.
Okay, so we all recognize the immediate visual allure of those 2026 glass towers. They look incredibly sleek, almost futuristic on day one. But the sources highlight a pretty harsh physical reality that hits fast, which is the rapid aesthetic and physical aging of those highly touted floor-to-ceiling windows. Just think about the sheer physical stress these materials are constantly under. You've got massive panes of glass battling intense thermal stress, wild temperature fluctuations, and constant UV degradation. Over a surprisingly short amount of time, the window seals start to fail, condensation builds up, and that initial flawless transparency, it gets compromised. That day one shine just doesn't hold up, meaning the building is literally physically aging right before the owner's eyes.
And it's not just the degrading glass. The source material points out some severe hidden costs of modern high-rise living. For starters, buyers are often stepping into a highly saturated market packed with interchangeable luxury units. I mean, if a developer builds 3 more identical glass towers right next door, your unit isn't exactly special anymore, it just becomes a commodity. On top of that, you're paying heavily for expensive amenities that actually see diminishing returns over time. Picture an automated smart parking system or this elaborate high-tech pet spa. Sounds amazing in the sales brochure, right? But when that stuff inevitably breaks down, it requires highly specialized, expensive maintenance. And that leads directly to ballooning HOA fees. So, new absolutely does not guarantee lasting when you're swimming in a sea of interchangeable units with massive hidden liabilities.
Let's shift gears and look at Section 2, the engineering of permanence.
When you actually analyze the physical materials side by side, traditional pre-war limestone and masonry offer undeniably superior thermal mass and acoustic privacy. Contrast that directly with the thin glass curtains of modern builds. They completely lack that heavy structural mass, which means they offer far inferior privacy. Imagine walking into a pre-war apartment and closing a heavy oak door. Boom, you are immediately met with this hushed, library-like silence because those thick limestone walls just absorb the city noise. Now compare that to a modern glass tower, where you might literally hear your neighbor's Zoom call through the shared walls. That difference in structural mass is not just some architectural footnote, it's a massive, tangible quality of life factor.
The reality is, these historic builds were quite literally over-engineered to last centuries, rather than decades. We are talking about structures built with massive steel beams, thick poured concrete, and heavy stone. These are materials designed to withstand incredible wear and tear, built way before the era of value engineering and cutting corners. This level of structural resilience fundamentally changes the trajectory of a building's long-term maintenance liabilities, which directly protects the buyer's wallet. When a structure is built like a literal fortress, it rarely requires the massive multi-million-dollar facade replacement assessments that constantly plague aging glass buildings. It goes from being a depreciating physical headache to a highly durable, low-stress asset.
Moving right along to Section 3, the economics of absolute scarcity.
To truly understand the financial power of these older buildings, we need to define a concept called absolute scarcity. This is the built-in limited supply factor of pre-war real estate. Think about it. Developers simply aren't making any more of it. It's physically impossible to construct a brand new 1920s Art Deco masterpiece today.
This absolute scarcity prevents the kind of market dilution we see constantly happening in new development zones. You might see 15 new glass high-rises shoot up in a single zip code over 5 years, totally flooding the market and suppressing prices. But the supply of historic pre-war real estate, it is permanently hard-capped at exactly 0 new units, and that acts as an unbelievably strong financial moat. Furthermore, the sources emphasize recognizing these historic addresses as true trophy assets. What this means is they possess a level of prestige that retains incredible value even during intense market volatility. Think about what actually happens during an economic downturn. When the market dips, those interchangeable glass units often have to slash their prices by 20% just to stay competitive with the newer tower down the street. But a trophy asset holds its ground. Buyers in that tier aren't just paying for square footage, they are paying for unmatched scarcity, provenance, and prestige. These properties weather economic storms far better than standard inventory simply because the demand for the unreplicable always outpaces the supply.
Which brings us nicely to Section 4, Wealth Preservation versus Depreciating Luxury.
When you look at the historical data, it maps out this fascinating story of wealth preservation over time. Let's do a quick contrast of a buyer in year 1 versus year 10 for both types of properties. For modern glass condos, once that initial newness wears off, a really steep depreciation curve often kicks in. Just imagine a highly customized 2018 smart home system built right into the walls of a luxury unit. By year 10, that company might be completely out of business, the software doesn't update, and suddenly that expensive tech is an obsolete liability that actually lowers the property's appeal. Now contrast that sharply against the steady capital appreciation and stable long-term equity of pre-war limestone classics. Solid oak floors, wood-burning fireplaces, and stone facades don't require software updates, they just appreciate in intrinsic value.
There's a quote from the data that hits the nail perfectly on the head. Architectural integrity protects equity better than high-tech gadgets that become obsolete. That right there is the core takeaway. True architectural integrity, which is built into the very bones of the building, is a far more reliable protector of your wealth. Trends fade, tech breaks down, and contemporary styles quickly become dated. But historic structural integrity remains remarkably constant. It basically acts as a vault for your equity rather than a leaky bucket.
And finally, Section 5, the sovereignty of character and legacy.
Okay, stepping away from the spreadsheets for a second, we have to talk about the profound intangible value of historic properties. Things like psychological value and cultural statement aren't just marketing buzzwords here. They represent the actual lived experience of the owner. We're talking about the reality of historic craftsmanship. Hand-carved crown moldings, solid brass fixtures, unique asymmetrical floor plans, and thick plaster walls. It creates a completely unreplicable sense of place. You aren't just buying a place to sleep, you're effectively living inside a piece of art. Owning a piece of New York history serves as a powerful cultural statement. It signals a deep appreciation for endurance and legacy, a statement that a mass-produced glass tower simply cannot mirror, no matter how high it reaches into the clouds.
Taking everything into account, the undeniable physical durability of the materials, the unyielding economic moat of absolute scarcity, and those incredibly rich qualitative benefits, the sources deliver a very clear, impartial verdict for luxury investors this year. The smartest money in 2026 remains anchored in the city's architectural past. It's a fascinating, maybe even counterintuitive conclusion for some, but it's one drawn entirely from how these respective properties actually perform and endure in the real world over generations.
So, as we wrap up this explainer, I want to leave you with this to chew on. What kind of legacy are you investing in? Whether it's real estate or any other long-term holding in your life, ask yourself if you are buying into a temporary depreciating illusion or true lasting permanence. Thanks for joining me today, and I really hope this provided a much clearer picture of the real forces driving the luxury real estate landscape right now.